Welcome. What I propose to do today is to talk with you about the most important, or one of the most important aspects of the profession, and that is value pricing. The way I'm going to try and do this is take you through what I consider to be the 7 steps that will help you successfully implement this whole notion called value pricing. And as many of you will know, with the ever increasing added value part of the services that we offer our clients, the most important part of that service is not just providing the service, of course, but to invoice it in such a way as the clients are being billed for what they perceive to be the value rather than the amount of time that we spend. So what I'm going to do is I'm going to use the flip chart here to scribe up a few notes as we're talking, and hopefully you'll find the program helpful. The first thing that I have got documented is that our time recording should be aimed at reaching 100% of the available time that we spend as chargeable within the firms. Now, in order to do this, we have to just go through a little process of recognizing one of the biggest problems, and that is that we do not record the truth of what we actually did in many firms. And the primary reason for this is that fee earners get worried to death that they will be jumped on because they exceed their budgets, and therefore the percentage recoveries are not what we want them to be. And it turns out that the percentage recoveries seems to take an overly large amount of effort, whereas the truth of the timesheet is that we should be looking at the number of hours and then making sure that those hours reflect the invoice. Now that, of course, is for compliance work. So if we work on a 7.5-hour day, for example, there are 1,950 hours in the year. If we allow 4 weeks for holidays and 2 weeks for bank holidays and another 2 weeks for training, that'll bring us down to 1,650 hours. We then allow, on average, a whole month for staff appraisals, inwardly facing meetings, marketing meetings and the likes. And so that comes off, and then we get down to the 1,500 chargeable hours that we are now seeing firms achieve on average across all fee earners. Some are, of course, doing better. Now, if we can overcome this and get people to record the time as is the truth without worrying that they are going to be in trouble for breaking their budgets, then we are down the first step of getting value pricing well established into the firm. In order to do this, we must introduce some sort of amnesty on the timesheets whereby we promise staff members that we will not jump on them if they break their budgets, so long as they apply what is known as the 30% budget rule. And that rule is basically, whenever we know we're slipping on our budgets, we need to tell the manager or the partner involved, who then has a chance to speak with the client whilst the job is happening to see if we can get a price increase. And this is particularly so if the reason that we're slipping on our budgets is because the client's records are really not up to scratch. Okay, so that's the first thing that you might find helpful in getting value pricing in place. The second point would be to get the words "as agreed" on every invoice. By definition, that will have meant that somebody has spoken to the client and agreed the fee before we run off and do whatever it is the client needs help with. So if we can get the words "as agreed" on every invoice, then we have cracked at least the discussion of fees before we run off and help the client. Very tempting though it is for many of us over the years to take a phone call from a client, run off and do it, and then wonder how we're going to get a bill for it. This, of course, helps to stop that. Okay, and then the third thing that I've got noted down here is that the charge-out rates for non-compliance, i.e. the fancy footwork, should not be higher than the normal charge-out rate, as is common. In fact, if you made the charge-out rate for non-compliance £1 per hour, that would force the fee earners in the non-compliance area to ensure that they've talked about the fee, what the fee is going to be, and agree those fees with the clients. And merely the timesheet now is a function of how much time and therefore cost has been allocated to the job in hand. So rather than having a high corporate finance rate, for example, we'd have £1 an hour just to make sure that the time is being properly recorded. The fourth item that we've got listed down is training. We need to train everybody how to get this value pricing notion in place. And what we found is, if you do one training session, it will not work. In fact, we've found out that you need 3 sessions. The first one would probably be the main one, maybe lasting an hour or 2, and the second and third, perhaps, I beg your pardon, the first session would last 2 or 3 hours, and the second and third would be maybe 1 hour, possibly 2, to reinforce the whole area of value pricing in the following way. And by the way, we think that this should take about 18 months to do. So in the following way is actually number 5, and we call those getting the right scripts. You've got to get the right scripts, i.e. when a client rings up with a very common issue, almost verbatim we need to learn the scripts of the benefits of doing certain things. Now, for example, if a client phones up and says, I need to borrow more money from the bank, the script would be something along the lines of, okay, well, you need the least amount of security, the lowest interest rate, maybe holiday repayments, personal guarantees hopefully be avoided. Those sorts of scriptings everybody should know, and by doing that, then I think we sound so much more professional. The sort of scripts that you might find helpful will be bank borrowings, financial services, tax planning schemes, scripting for networking. That's also an important part of scripting. So, for example, you would go as a youngster maybe to a Barclays Bank seminar. People come up and say, what do you do? And we're able to say, what do we do in such a way that makes us different? For example, a great friend of ours in Northern Ireland, one of his scripts is, we start where most accountants finish. And then of course people would say, oh, what does that mean? And then you say, well, you know how most accountants do the accounts and tax returns, and that's sort of it. That's where we start, and we tend to think about tax planning, profit improvement, strategic planning, and those sorts of added value. And that gets people into dialogue with clients in the networking, and as an example of scripting. Also want scripting for profit improvement, and indeed for strategic planning. And that is part of this whole training aspect. So we've got the time recording sort of discussed, and people understand the amnesty, and they know what scripts that they can run off to explain to clients the benefits of what we can provide for them.